But it wasn't until after gold got re-legalized in the 70s. In 1975, gold was going for originally 20. It went to $200 in 1975. That's a tenfold junior. They added a zero. And then the next zero was added this past year. That was $2,000. And believe me, there's going to be another zero in our lifetime, and that'll be tenfold. So you say, well, it can't be tenfold. That's impossible. But it did it. It went from 20 to 200 to 2,000. But here we are at $2,000. And it could be now, what I'm saying, it could be 20,000.
Hello, everyone. I hope you're having a great day and staying focused in these turbulent times. Welcome to another episode of Investors Brief, where today we will be discussing how the end of dollar dominance is now visible to everyone. Not just the elites, not just the experts, but every person who looks at their bank account and feels that something is fundamentally wrong. Every day, our team here at The Brief publishes videos like these to inform you about what some of the smartest and wisest guys in the room are actually doing. Not what they are saying on the news, but where they are moving their capital. Our team has been reading your comments daily. We see your questions, your concerns, and your insights. This dialogue has now become a permanent part of our channel's DNA. Let us know what you think of this series called Investors Brief in the comments below, or just comment OG right now to show your presence, and let the community know you are standing guard. Before we dive into the meat of today's topic, I have a very serious announcement. Make sure to check out my official X handle at OGJohnAG. As you can see on the wall behind me, I post content there that is often too sensitive, too raw, or too close to the truth to share on mainstream platforms. There is a battle for information happening right now. Copycats have launched YouTube channels that are completely copying our titles, our scripts, and even our thumbnails. It's a sign that we are hitting a nerve. You can watch how my videos get uploaded by multiple fake channels just a few hours after I post the original. They can mimic the ideas, but they can never take this handle or the spirit of this community. Stay on the lookout for such channels. If it doesn't say OG John AG, it isn't the source. Getting back to today's topic, we are living in truly extraordinary times. These are the moments history books are written about. The foundations of the global financial system are being tested like never before in human history. The dollar, which was once the uncontested king of world currencies, is showing signs of terminal strain. The consequences of that strain are beginning to ripple across every economy, every government, and every household on this planet. Many experts, men who have spent 50 years in the trenches of finance and economics, are of the opinion that the current monetary system is approaching a climactic end. This is not a distant theoretical risk for the year 2050. This is unfolding before our eyes in real time. The effects on your personal wealth, your individual liberty, and the global balance of power will be more profound than anything our generation has ever experienced. Consider the state of the American economy today. The national debt has ballooned to levels once thought to be the stuff of science fiction. We are borrowing trillions of dollars not to build, but to survive. We borrow to sustain bloated government spending, to fund foreign conflicts that never seem to end, and to maintain the fragile illusion of stability for a public that is increasingly anxious. Historically, periods of severe debt led to recessions or depressions that allowed the system to clear out the rot. But today, the situation feels different. Past warnings about deficits and government overreach were always followed by temporary corrections, a little bit of pain to fix the problem. But the scale of consumption we've seen recently, both the consumption of real wealth and the consumption of the dollar's credibility, suggests a deeper, more systemic problem. Over the last 50 years, the United States has effectively consumed the value of its currency to pay for the present. This erosion of purchasing power is not just an abstract number on a Federal Reserve chart. It is a direct impact on the public. It is a theft of time. When the currency loses value, the hours you spent working last year are worth less this year. It has diminished trust abroad and weakened America's standing on the global stage. Meanwhile, other countries and competing currencies are poised to move in. The risks associated with this imbalance are accelerating every single day. The idea that a major bankruptcy or a total financial reset could occur is no longer a hypothetical scenario discussed in dark corners. Even those deeply entrenched in the financial markets, the guys in the silk suits, recognize that the current trajectory is unsustainable. They know the math doesn't work. The story of gold illustrates these dynamics vividly. During the 1970s, after the closure of the gold window by Nixon, gold surged from $35 an ounce to over $800 in a matter of a few years. Why? Because the market realized that the anchor was gone. That dramatic rise was a direct response to the debasement of the currency and the uncertainty surrounding the government's ability to pay its debts. Today, we see similar, even more aggressive patterns. We are seeing gold rise $250 or more in a single day, sometimes within a few hours. The speed and the scale of these moves are alarming to the uninitiated, but to us, they are signals. They signal that the financial system is under extraordinary, perhaps terminal stress. While the mainstream media looks for a single explanation, a war here, a bank failure there, the underlying cause is consistent and singular: government excess and monetary mismanagement. Income inequality is another symptom of this broader issue. We hear a lot about the gap between the rich and the poor, but we rarely hear about the cause. The wealthy often benefit first from new money. When the Federal Reserve prints $1 trillion, that money doesn't go to you first. It goes to the big banks and the government contractors. They get to spend it before prices rise. By the time that money reaches the middle and lower classes, the prices of milk, gas, and rent have already moved up. This is the hidden tax of currency debasement. Even if half of Americans pay little to no income tax, they experience this more insidious form of taxation every single day. Since 1971, when the commitment to maintain currency value was effectively abandoned, each expansion of the money supply has disproportionately impacted those without access to financial insulation. As a result, wealth concentration continues to grow and societal tension rises. This inequity is not just economic, it is deeply political. Calls for fiscal responsibility, balancing budgets, and cutting spending are often ignored because the immediate consequences of austerity would be devastating to the political class. In other words, doing nothing is dangerous. But acting without preparation could be catastrophic for those in power. The result is a precarious balancing act that has persisted for decades, fueled by a combination of political expediency, short-term thinking, and a flat-out refusal to confront the uncomfortable truths about our debt. Austrian economics, which emphasizes the consequences of currency debasement and debt accumulation, has long warned of these scenarios. Thinkers like Ludwig von Mises and Murray Rothbard noted that when an empire or a monetary system becomes misaligned with the underlying economic reality, the eventual reckoning is both inevitable and severe. In our current environment, wealth discrepancies, government overreach, and declining currency credibility are combining in ways that suggest a major systemic reset is near. The fragility of the fiat monetary system has even been highlighted by major financial thinkers at global forums like Davos and the IMF. They have noted, in their own coded language, that the current world currency framework is dying. Evidence of this is everywhere: skyrocketing debt, deficits without sustainable solutions, and rising gold prices that refuse to come down. The question is no longer whether the system is failing, but how quickly it will unravel. How will governments respond when the people lose faith? What choices will billions of people make in reaction to a dollar that no longer buys what it used to? At the individual level, the impact is clear. Those who understand these dynamics are moving into tangible assets like gold and silver to preserve their hard-earned wealth. Those who rely solely on the dollar, those who keep their life savings in a digital bank account, risk seeing their purchasing power evaporate overnight. The monetary system has become a tool through which purchasing power is effectively redistributed, often from the productive class to those with early access to new money or political influence. This results in more than just economic instability. It creates a social tension that has the potential to spill over into unrest and conflict. As we look at gold today, its rapid ascent reflects more than just investor speculation. It signals the eroding confidence in paper money itself. Gold recently reached $500 an ounce, a level that would have seemed like a fever dream just a few years ago. Yet, history offers a roadmap. After gold was legalized again in the 1970s, it surged tenfold from $20 to $200. Then, if current trends continue, and with $34 trillion in debt, they almost certainly will, reaching $20,000 per ounce is within the realm of mathematical possibility. The scale may shock some, but the pattern is consistent. When trust in currency collapses, people flock to assets with intrinsic value. Gold has always been, and will always be, the ultimate refuge. The mechanisms driving this are simple, yet profound. As governments print more money to fund spending and sustain deficits, the purchasing power of that currency diminishes. Inflation is no longer just a concept in a textbook. It is a tangible erosion of everyday living standards, and this process is accelerating. Each day, the financial system edges closer to a point where paper money may no longer serve as an effective measure of value. This scenario is often described in Austrian economics as a crack-up boom, a term coined by Ludwig von Mises. It is the moment when everyone simultaneously seeks to abandon fiat currency in favor of assets they perceive as safe. In this environment, gold does not merely rise in a linear fashion. It can explode in value as the currency it is measured against falls toward zero. People become unified in one goal: protecting their wealth from the slow theft of inflation. They turn to anything tangible, anything with lasting value. The consequences of such a shift are immense, not only for investors, but for the very governments that depend on the stability of the currency to stay in power. Global politics cannot be disentangled from these economic dynamics. The strength of the dollar underpins America's influence worldwide, from military alliances to trade negotiations. If the dollar falters, the consequences are immediate and global. Funding for NATO and other international commitments may decline, and collective defense agreements may become ineffective or totally ignored. Countries that have relied on U.S. dollars for stability will face sudden economic shocks, forcing a reevaluation of alliances and power structures. Economic collapse can ripple outward, reshaping global geopolitics faster than any strategic plan or policy decision. Predictions about territorial influence or military interventions must be understood in this context. Markets may place odds on events like control over strategic regions, but those predictions assume stability in the underlying financial system. If the dollar weakens further, the U.S.'s capacity to project influence diminishes. History shows that currency and economic strength are the true backbones of geopolitical power. Wars are expensive, and countries cannot sustain global ambitions when their currencies are under pressure. Exhaustion, resource depletion, and economic collapse inevitably curb even the most aggressive strategies. The trajectory of NATO and similar international alliances may also reflect these economic realities. If the U.S. cannot maintain its financial commitments, collective defense arrangements may become irrelevant. The effectiveness of these institutions relies on predictable funding and coordination. Without it, alliances could fail or lose influence entirely. This is not just a theoretical scenario. It is a logical outcome of the intersection between domestic fiscal instability and global obligations. Meanwhile, freedom and personal liberty remain at stake. Governments under pressure often impose restrictions on speech, financial transactions, and public assembly in the name of stability. The erosion of civil liberties can accelerate when citizens are anxious about economic survival. At the same time, technology offers new avenues to disseminate information and ideas, creating a duality. The internet allows for broader awareness, but it also provides a platform for misinformation and control. Understanding this dynamic is crucial for anyone navigating these turbulent times. Those who grasp the scale of what is happening can make informed decisions. Recognizing the limits of fiat currency, understanding the role of gold and other tangible assets, and engaging with communities that analyze these trends are essential strategies for preserving both wealth and autonomy. The signs are unmistakable. Economic and political systems built on unstable foundations are approaching a critical point. Whether that point results in a gradual adjustment or a sudden shock remains uncertain, but the implications are undeniable. Gold, in this sense, becomes more than an investment. It is a symbol of stability amid chaos. Its rise reflects both confidence and fear. Confidence from those who understand its enduring value, and fear from those watching the unraveling of paper promises. As we consider the longer-term implications, the question of liberty and education becomes increasingly important. A central theme of this channel is the ability of individuals to access information and make informed decisions. The internet has democratized knowledge, enabling broader awareness of economic and political realities. For decades, spreading the message of sound monetary policy and liberty was challenging. Before the internet, reaching even a small group of students or interested individuals required immense effort. Today, however, engagement is significantly broader. Young people, in particular, are more receptive to ideas about sound money and freedom. This generation has access to unprecedented amounts of information and the ability to discuss global issues in real time. Their awareness provides hope that knowledge can counterbalance some of the systemic pressures building in the economy. Yet, the scale of the challenges cannot be understated. Decades of fiscal mismanagement and central bank interventions have left deep structural problems. Liquidating debt and restoring trust in currency are monumental tasks. These transitions are inherently chaotic and dangerous. History has shown that such shifts rarely occur smoothly. The speed at which financial and political systems change can outpace the ability of citizens to respond. The future of the global order is closely intertwined with these economic realities. Returning to gold, its role in this landscape is pivotal. Gold represents trust beyond the reach of government manipulation. The recent surge to $5,500 is a signal that markets are anticipating continued erosion of currency value. If trends persist, $20,000 per ounce is not a distant fantasy, but a plausible outcome. The pattern of historical surges combined with current economic conditions suggests that this growth could occur in our lifetime. Those who recognize this are not merely speculating. They are responding to the predictable consequences of decades of policy choices. Despite the uncertainty, there is reason for cautious optimism. Awareness is increasing, knowledge is spreading, and a new generation is ready to engage. The lessons of history, coupled with modern tools for communication, provide an opportunity to navigate this crisis more effectively than previous generations. Individuals who prepare, stay informed, and understand the underlying mechanics of money, liberty, and global politics will be better positioned to protect themselves. Ultimately, The story of gold, currency, and global order is one of cycles, human behavior, and systemic consequence. The rise of gold to $20,000 reflects both a warning and an opportunity. Economic collapse and the erosion of freedom are real risks, but so is the ability to recognize patterns and act decisively. The coming years will test everyone. Those who understand these dynamics and act accordingly will have a significant advantage. Keep your eyes open, stay vigilant against the copycats, and continue to educate yourselves. The truth is often hidden in plain sight, but it requires the courage to look. Like always, invest with logic, not hype.